All right. Good morning. We're back. Hope everybody had an amazing holiday weekend and holiday President's Day yesterday. Welcome back to the Harmonic Trading Club, HTC FX Live. Hopefully, you guys can see the title. So, in this video, we're going to be adding to the myth busting series because I stumbled across something and I was looking closer and I said, "You got to be kidding me." So it's actually dealing with something that's pretty popular, and that's the triangles, your ascending triangles and your descending triangles, breakout patterns, basically, um, showing once the price is inside of the range and tightening and compressing, and then usually that's when you get your breakout. But looking over several pairs, at least in Forex, I probably got to do the rest of all the other markets just to really lock it in and tie the theory in. I noticed something, and that's when you have these ascending and descending triangles, the opportunity to go exists early, meaning traders who are trading breakout patterns on triangles are usually entering too late. So we're going to walk through that and kind of like investigate it all together, and then hopefully everybody can learn some things from it. So that being said, hit the like button if you like what we got going on so far. Share this video with a trader that you know that it can help, and subscribe to the channel if you're not subscribed, where we do teach everything that we're going to talk about in this video in great detail in the Harmonic Trading Academy playlist. So jumping right into it, no more time wasted. I got how many? 1, 2, 3, 4, 5, 6. I got 6 pairs up here. So we're going to walk through them. We're going to break them down, talk about what happened. So this might take us a minute, not too long, but you're going to learn a lot in this video because it's also going to incorporate a lot of the other things that I teach and talk about. So USD CAD, okay? Ascending triangle, okay? So let's do some definitions for the people who are not aware. The ascending triangle pattern is a bullish breakout pattern where you'll have a area of resistance and then you'll have a series of higher lows forming, suggesting that there's buying pressure that could lead to a breakout. As you see what happened right here, that's currently what's in place. The breakout just happened on that candle right there. Let me come a little bit closer so you guys can see. Okay. So here's the resistance that I was talking about. Usually going to be looking for a flat line, and then you're going to be looking for the one that breaks and closes above it. Now, here's the problem with it. The traders are taught to wait for that candle to break and close. In this case, this will be this guy right here. And then you go. Now, what did you hear me say in the intro? I'm suggesting that that's way too late. Okay. I'm also suggesting that the signal to go happened a long time ago, not right there. So that is confirmation. It's not confirmation, but it is a higher high, higher close. It's not a new structure, but it is H3C. So that's how you want to label it. Higher high, higher close. So that principle suggests that, let's say you get a candle closing, taking out the previous set of candles. So the H3C principle is actually deployed at that point. Higher high, higher close. And we do teach the higher high, higher close principle in the academy. But that would be the signal, okay? Now remember what I said is that's late, okay? Now why is that late? I didn't say it, but I'm saying it now. Typically, the decision on what's going to happen in the price action happened a long time ago. And what I've noticed is it's usually somewhere in the halfway point through the second half or 2/3 of the way through. That's when the decision is made, meaning this is way late. And that's why I have both risk versus reward tools up to show the difference in between if a trader went when the signal was actually provided. In this case, at the 50% mark, halfway through the triangle. The signal was already given. So not our A plus not our A plus candle. Excuse me. I probably should have walked away for that. But engulfing candle, and this is why your eyes need to be sharp enough to identify this. Doji, trigger and entry. Okay? But the confirmation is up here at the top. So this is the entry at the close, completing this 3-bar reversal. That's why you see the comparison between the two methods. Not saying that the breakout method can't work, it's just that traders are typically being trapped. Let me ask you this. I'll say it like this. If all we had to do was wait for breakouts and everybody could just trade ascending or descending triangles, everybody would be rich. We wouldn't be here right now. Also notice that at the point of breakout, price is already overbought. Trading the breakout method. Excuse me 1 second. Yeah, really, really windy in Vegas right now. Just really, really taking me apart. That's why I'm really struggling. But the breakout, where was it? Okay. So if you trade the breakout method, price on RSI is already overbought, meaning this is pretty much could end, stop, correct. Even if it came back down to retest those areas and continued up, you don't know, because you could get a full correction because you're overbought. So off this leg low to this high, you could get a very, very long drawdown. Could, not saying what's going to happen. But the fact of the matter, let's focus on the entry at the 3-bar reversal. So what that allows a trader to do is enter at the close of the 3-bar reversal and target the recent high. Okay? Versus, so that one is a 1.41 to 1 risk versus reward. Versus the breakout method, and I'm going to talk about this one too, where the breakout occurred right here, the entry for the breakout, that higher high, higher close right there. Let's say they target the same high right here. Let's say they target the same high. See, the problem is they don't really have a place to put their stop. It's going to be arbitrary. Okay? But for the sake of a decent trader, let's say they were going to go ahead and put it up under the structure, then they'd be looking at 155. So the breakout risk versus reward is a little bit higher, but they're late and it's at risk because you're already overbought. Versus, here's the good part about it, versus entering at the 3-bar reversal where you're oversold with bullish divergence, meaning the signal had already been given. Okay, and you can see off and running. But this decision, for what we see happening right now, what I'm trying to say is the decision was already made. Okay, so I can understand the want or need to let it break and close first, and then we know, versus entering the trade and then you still were going to end up in the same place anyway. Okay, let's look at another example. That was dollar CAD. What is this? I do appreciate your work. I would like to know, why is it that most of the C leg of the harmonic patterns are not specific, like Cypher and Shark? Okay, let me get through this. Stay with us. Let me get through this breakdown. I can't segue and jump around, so I need you to stay with me when we're doing our videos. Let me get through what we're talking about, and then I'll come back and answer that question for you, specifically for you. And you asked me a question about gold on the last video, and I dropped a link on that gold batch you were asking about. Let's go look at euro dollar, okay? It's going to be pretty much the same thing, okay? So in this case, euro dollar, descending channel, so bearish possibility, okay? Now remember, The traders are going to, the breakout trader is going to wait until this area of resistance. Remember, so you got a flat line followed by lower highs. So that's your descending triangle. And then waiting for that breakout, which is not happening until now. Okay? So that's this one here. Maybe be able to get a 1-to-1 depending on where this candle closes in 19 minutes. The breakout will be confirmed. That's their lower low, lower close. Lower low, lower close, probably established in 19 minutes. So they're entering way late. The signal, look at the two different risk versus reward tools. The signal was actually way up here in the form of a 3-bar reversal. So remember what I said, right? It's usually that signal on a ascending or descending triangle. That decision is already made somewhere around the halfway point of the triangle, not at the end of the triangle. The decision on what's going to happen, because these things are based off structure and Fibonacci, just like everything else, nothing is excluded from that. Nothing can get away from that. Nothing doesn't operate outside of that framework. This is the thing that people aren't telling you, and I'm going to illustrate that for you right here. Luckily, I'm already short euro dollar, so I don't have to worry about this here. But this is just now about to confirm in 17 minutes. You probably will get, in this case, lower low, lower close. On the bullish example, it's higher high, higher close. So H3C versus L3C. Lower low, lower close principle about to take place here when this candle closes. But again, the entry was way down here. This 3-bar reversal, engulfing candle doji, trigger an entry confirmation, and you can go way down here. So let's look at the two setups. We don't have this one yet, but it's getting close. But let's look at our 3BR setup, our 3-bar reversal setup. Entering at the close of those candles. Let me just drag that all the way through. Okay. Entering at the close and confirmation of the 3-bar reversal. Stops, because your stop is not going to be arbitrary. Now you know your stop is going to be above the structure, above the highs in the 3-bar reversal zone. And then your target on this trend continuation, swing high to swing low, extension 127. Giving the trader a 2.8, almost a 3-to-1 of risk versus reward, versus waiting for this breakout, maybe hoping to get a 1-to-1 because they were probably only going to target the next set of structure. While if you're trading according to Fibonacci in the right way, you're going to trade, your targets are going to be based off of the extension. So this is swing high to swing low, outside return, extension. And maybe this retracement here was probably about 50%. Let me see. 50, maybe 61%. 50, just like I thought. So you're kind of using your A to B is equal to CD principles as well. It was 50% on a dot. So what I'm saying is there's no reason to segment or separate your price action when it's all a part of the same move, okay? It's all a part of the same move. So you don't need to segment or separate or break out this part here and enter here for a trade opportunity that was actually here. Here was the actual resistance that helped this whole set of trend continuation. Okay, so breakout here, which is going to happen. The trader is just extremely late. Late. The signal was given way back here on 210. They're just now entering on the 17th, 7 days later. The signal was given right here on 211, I mean. Okay, so that's euro dollar. Euro CHF is a better example because this one is all complete already. This one is complete already. So the breakout trader, this one is descending triangle, structure, flat line at the bottom, lower highs to the top. And what they're looking for is the confirmation, which is this guy right here, okay? That's the break and close. That's the lower low, lower close. That's their signal to go. That's their signal to go right there. They're going to enter the trade without a target in sight. But of course, if they're entering right there, they probably would be smart enough to put their stop right above structure up here. But they don't really have a target. But here's the thing. Let's look at it the other way around. I said that midway through, somewhere between the halfway point of your triangle or the second half, the decision was going to be made already, meaning that traders waiting for the breakout are usually late or getting trapped because now they're too close to the next major Fibonacci ratio. Like in this case, there's really nothing to do. They're entering right here, and the 127 extension from this high to this low is right here. So look at ours, which is a 2.14 versus the breakout is a 0.66. It's inverse. Notice there's more red than green. So this one is actually a trap. Luckily, the trader would have made it home with a little bit versus 2-1 on their money, because in the middle of the triangle, there was engulfing candle, followed by doji, followed by trigger and entry, and then using Fibonacci from the most recent high to the swing low, 127. Again, late waiting on the breakout, the signal is going to be given way ahead of time. Way ahead of time. So this will help traders out who are looking for ascending and descending triangles. Just know that that signal is late. The decision had already been made. Let's look at some that have not taken place yet. And here's actually your favorite thing that you keep asking about because you're addicted to gold. Why not? Gold, ascending triangle, okay? Starting to create those higher lows. And we'll talk about, I think we'll throw your bad pattern in there after. But starting to create those higher lows. Okay. Now remember what I said. I said that waiting for this to break out and close above that is late, right? I said that's late. I suggested that the decision had already been made, okay? So there's no reason to wait for that to happen. One, you don't ever know if it's going to happen. Two, your decision was already made. Engulfing candle, doji, trigger and entry, closing above the doji. Okay? Retest in the zone, perfectly okay, can be expected. All right? So now price is just kind of sitting right here. That's why I have the retest signal there. And I have it lined off, kind of like a double bottom, respect it, and then you can go. Now, let's talk about this real quick. I said that on a pullback or retracement like that, coming up and coming down, okay, then you should be using Fibonacci for the target. Here's the 127. You see it because I drew it already. Fibonacci extension, swing low to swing high, that's the 127. This setup here, trading it toward the second half of the ascending triangle. Long short position right here where it closed, targeting the 127. Why not? Because everybody's anticipating a breakout and the signal was given early, stops right under. Risk versus reward. 2.48, almost 2.5 to 1, versus waiting for that breakout. Now, this one will be a little bit better, but the signals, actually, 127 on the breakout. Let's do it like this. Let's go aggressive and let's go retest the recent high, which is pretty high for gold, which is that 55, 5,600 area. 5.45 to 1 versus waiting for the breakout. Now, we don't know where that's going to be, but we'll just call it somewhere halfway through, okay? And let's say still putting the stop up under the low and then let's go after the high, because this is probably how the trader will construct the trade. So my question to you would be, do you want the 5.5 to 1 or do you want the 1.3 to 1? That's why you're late. And plus, once you get out of here, you don't know what's going to happen. Come back, retest, you don't know what's going to happen. Whereas you're already here with a very, very tight stop. Okay, so that was gold. I'm not going to forget about your cipher question. Bitcoin, same thing. So we got 6 examples, right? Bitcoin, ascending triangle. A lot of people seen this. So there's a couple of things going on here. One, of course, one of the main things is, of course, is we're dealing with some structures from the Bitcoin cipher. But coming back to where we are, ascending triangle, okay? Now, some traders might want to wait until you break and close above the horizontal line, okay? Try to get H3C, higher high, higher close. So, Don Prazi, you speak German and you sent me a message asking if I could start getting you either German translations or German closed captions. I am working on those. And I know you do speak a little bit of English and German. And I appreciate you for reaching out way from Germany. That's amazing. That's quite the shout out. So yeah, if we're starting to reach internationally, then I'm doing something right. If my message is getting across to Germany, then I'm doing something right. But I'm working on that. I spent some time working on it yesterday, even on a holiday. I figured out to make sure that since this is starting to go international, that people in other areas are able to get the information. But for Bitcoin, waiting for H3C, right? As I suggested, the signal was already given. So waiting for H3C, waiting for higher high, higher close is too late. It's late to the party. Here's why. Bearish engulfing candle followed by doji, followed by trigger and entry, which is right here closing. This was the confirmation. A retest in that area is perfectly fine. Your psychology just has to be strong enough to withstand that. Hopefully the support stays and you can go. Otherwise, you're just going to need a very tight stop up under your 3-bar reversal. Let's talk targets on it real fast. Couple of different ways. I don't know how the trader would do it on the breakout out of the resistance zone would do it. But let's do this. A trader who is trading this right here could trade the entire structure. Off the 3-bar reversal, could say, let me get rid of this. Could say, most recent high, the whole leg, swing high to swing low, and look for the 618. Could. This is just theoretical at this point. It's not doing anything. To the 618, and then they would have been entering right here, and they would be trading up to the 618 with stops right up under it. I'm going to have to probably get a little bit closer. I came out too far. All right. Okay. Now that is a little extreme. That would make anybody's day or life amazing. Versus, let's look at the breakout strategy. Whenever that would be, don't know because it's completely arbitrary. We don't know. With stops up under the recent structure. But we don't know if they would be targeting the 618 because they're not trading according to structure and Fibonacci. you know what? To be honest with you, they'll probably just trade that right. There's nowhere to go because you're breaking out. What's the next level? Right here. They'll probably typically trade it up to the next level of structure, which they would call. It's crazy. Sometimes I have to put the hat on of other different traders when I'm explaining how other traders deploy some of the typical and common systems. But their structure, they would be looking to trade right up here. So that'd be another inverse risk versus reward. Maybe they could try to level it out and try to get it to a 1-to-1, which would be like that. They trade that to a 1-to-1 versus the way that we look at it in the Harmonic Trading Club, which is like 15-to-1. Okay. Because again, I'm suggesting, and we're still going to make some more use cases out of this, that the decision was already made. Okay. Just as the decision was already made on this descending triangle on $CAD, and you see what happened. The decision was made in the middle. Euro dollar working, the decision was made in the middle. $CAD, the decision was made in the middle. The breakout is late. I'll show you again. On this ascending triangle, traders waiting for this breakout are late. The decision was made in the middle of the triangle. Euro dollar, traders waiting for that breakout, the decision was made in the middle of the triangle. You just have to know where your target is. We use the Fibonacci extension from the recent swing high up here to the swing low, 127. On Euro CHF, the trade is done. The decision was made in the middle of the triangle. Traders waiting at the breakout are getting trapped. They entered too late. Inverse risk versus reward. Gold is still pending, but the decision was made to enter that this is likely. Now throw this in here for one of my favorite members who just consistently rocks with us every day, and you asked me about this, so I'll do it now and then I'll finish this up. But yeah, you were asking on the 4-hour, is there a bullish bat pattern here? And the answer was, okay, let me come off that. Hold on, that's wrong. X, A, B, B to C, and C to D, 886, which happens to line up more Uganda. Okay. Here's the bat pattern you were asking about. So yeah, so it lines up with what we're talking about with that projection using the 3-bar reversal and me suggesting that we could target from swing high to swing low. Oh, I'm sorry, it was the 127 extension from the low to the high. Or there's another thing that we can do with it. We're going to go ahead and finish this up. X to A. We'll bring on 786 and 886. We already know that 886 is the D leg on there. We already know that. From Uganda. 886, 786, and watch this. The 618 is probably going to be around that 127 too. Probably confluent. Okay, 618 is a little bit lower. But little consolidation, but still the ascending triangle action in there, suggesting that there might be enough buying pressure there for a breakout. So if you got the opportunity that's going to happen before it, might as well take it. Tighter stop, better risk versus reward. Okay. Again, Bitcoin's got the same thing. Bitcoin's got an ascending triangle. Higher lows, flat on the top, horizontal. The signal was given, 3-bar reversal before anything else ever happened. Traders waiting to the breakout are potentially late to the party. Dollar Swiss is a good one because it has not made a decision yet. So this really, I'm going to kind of pass on that. When I was looking for the structure, I was looking for the higher lows, but you got one here that's a little bit higher. So this one, I'm going to go ahead and bypass on it. So with those things being said, I want to do something else real quick. I want to, before we shut off and get out of here, Austria. That's okay. That's amazing. Okay. So some of the stuff that we did last week, so we'll just bring this whole thing full circle. We talked about His bat pattern. Let me go back to the question. Why is it that most of the C leg on harmonic patterns are not specific? Let's do that. Okay. So I really want to point you back to the academy and say, just go watch the videos. I explained it in the videos, but we'll do this real quick. And you're thinking about, what do you mean specific? Let's do this. Let's just do this real quick. Write this down or clip it. Cipher pattern, rules of engagement. Let's just do this real quick. Then we'll get out of here. Damn, where you at, boy? Okay. I just need to make this bigger so you guys can see. All right. So, for you, cipher C leg at the top, okay? The filter, that's too, I don't want to be that low on C. I want to come up here. I want to come up here right there, okay? So, the rules for cipher, okay, and this is all you need to know, is the C leg is valid with a minimum 127, okay? Minimum 127. Can go as high as 1414. Okay? That's all you need to know. So that's the range. That's the filter for the C leg, since you're asking. 127 to 1414, extension of X to C. So your question, why they're not specific, it's not going to be. It's going to fall inside of that range. Okay? So that's why. Shark, a little bit different. Okay? Shark, his C begins at 1414, must touch 1414, can go as high as 1618, but cannot close beyond 1618. So Shark has a filter too. But Shark's C leg begins at 1414 and can go as high as 1618, but cannot close beyond 1618. But you got to remember, the Shark's D leg completion must be beyond X and is the 127. Is the 127 inversion the other way from C to X, 127. I hope I answered your question. So the reason it's not specific is because both of those two, Cipher and Shark, have different ranges. Cipher 127 and 1414. And D must complete above X at the 786. Shark 1414 and 1618 cannot close beyond 1618, or you're out of Shark, that's invalid. And D leg must close beyond X, lower than X, at the 127 minimum. Okay? So you made me go do a walkthrough free on the house of two of the most powerful patterns. When I turn that payment system Cash App on, y'all better bring me that money if y'all can get that live. What's it called? Super Chat. When I turn those Super Chats on, I'm coming for y'all. Y'all gonna have to pay for that in Super Chat. All right. Cool. I hope I answered your question. The reason that they're not always going to be the same. It's going to be based on structure, and it's going to be based on a number of factors that's going to determine why did he go way up there. The thing about it is it doesn't matter. You shouldn't care. If you don't like it, throw it in the trash. Go look for something else. That's the real answer, because it's not always going to be like perfect. So, and to be honest with you, if a pattern is ugly, I might pass it up just because I don't like the way it looks. If it's too stretched too far, let's say it's right inside the rules. So this is where traders force patterns. It's fitting right inside the rules, barely. If it's barely like that, I might say, you know what? I want the cute ones. I want the best ones. I want the ones that look good. I don't want the ugly. I don't want to force nothing. I want to take the best of the best. I put it like that. So if it's looking too distorted, I'll say, you can probably pass it up. If it's all over the place, you want to get it right within the rules. If something needs a 618, then try to get it on the 618. I'm not saying pass them all up, but if it's doing way too much, if you trying to make it be a pattern, I'll put it like this. If you're trying to make it be valid, then you probably don't need it. And if you try to force it, you're probably going to pay the price for trying to force it. That's what I'll say about that. We talked about a number of things last week. We talked about a lot. I think NZDJPY was one of them. You guys remember this? NZDJPY is the one where I was telling you that you need to decide, you need to pick a side. Are you an investor? Or are you a trader? And then this cipher was on here. So just a quick little update on some of the stuff that I know we were looking at last week. So you did get a retest down here in the PRZ of our cipher. Okay, so remember we used a 3-bar reversal for it. We used a 3-bar reversal for it. He comes up, he does come down, kind of like in that area, scary a little bit, comes up, and then still here's the what I want to show is this in here is still using the support that was created at the doji, which is one of the principles that I teach. You can usually expect to find the support. The new low is a support that's created at the doji. And that's what you'll typically see price want to stand on winners. I mean, it's not like Gartley where you have to stop at 618. Well, two completely different patterns, two completely harmonic makeups. Oh, do you mean? Well, the C leg on Cipher and Shark are based off of an extension. The Gartley C leg is based off a retracement of A to B. So I don't know where you're going with that. I don't want to stay here and draw all day, but if I can figure out what you're asking me, then we'll try to bring it home. So there are two different types of patterns. Okay, I can tell you that. I'll do this. I'll do this. I'll do it like this. I'll grab the XABCD tool, right? XABCD pattern tool. Gartley and Bat are in the same family. 50. 886. I'll put it like this, okay? Gartley and Bat are in the same family. They are X, A, B, C, D patterns. They're also A to B is equal to C, D patterns. They're in the same family. While Shark and Cipher, here's Cipher first. Shark and Cipher are in a completely different family. That's the easiest way I can explain it to you. Okay? Gartley and Bat are in a completely different family from a different. They follow a different set of rules. These are X, A, B, C, D patterns. These are patterns with higher C's can be higher. C's must be higher than A on these sets. C's must be lower than A on these sets. There's one more. It's butterfly. Hold on. And he fits over here. But he fits in the middle of both. This is the guy that puts them both. Butterfly. Even though his C on Cipher must be higher than A for both, his D must be above X. Shark, his D must be beyond X. Butterfly, D must be beyond X, but his C needs to be lower than A. So he's closer to this side, but he has a little bit of Shark in him, and he has a little bit of crab in him. All right, so these are your major 6. So answer your question is because of the family that they fit in and what their requirements are. All of this is in the academy. Okay, cool. So again, I had wanted to just stop on the last video that wasn't that we did last week was NZD JPY cipher and show how it's doing. It's kind of like at a break. It's kind of like a few pips down right now because the entry was right here at the close of this 3-bar reversal, which is kind of like where he is right now. So after a couple of days, really no movement. But here's the thing. What I've been teaching lately, hey, listen, I'd rather be right there at a break even than trying to chase this thing around and getting whipsawed and buzzsawed and cut up and, trying to get out there and play when I know where the big move is. I know that, hey, listen, this guy here, I'm putting myself in a powerful position with a bullet cipher pattern. I'll let him dance around, do his thing, and take my chances with a really tight stop under it. So I think we got it all. The myth of the ascending triangle, or the triangle myth, I think is what I called it. Take a look at this video little bit closer and see if you agree with it. See if it makes sense to you. See if you can see, just do some back testing of your own. Go look around and say, damn, there was, in this case, a descending triangle, but the decision was made a long time ago. Then the price action happened, so that hopefully you can avoid getting trapped in nonsense like that. Remember, that's what we're here to do, is to teach, unload, and just make better traders and just clarify things that no one wants to tell you. But we'll do it over here at the Harmonic Trading Club. That being said, you guys share this with a video, share this with a trader that you know it can help. Subscribe to the channel if you're not subscribed. Hit the bell icon, should be notified when who else does this kind of shit on YouTube comes out. Other than that, you guys be good. Take care of yourself in the market, and I will see you on the next video.